The sterling versus U.S. dollar is extending to new lows. BOE's Governor Bailey said that there is still further room to cut rates. The extent depends on the path of inflation, and that has helped to weaken that currency pair a little bit further in trading today. It was already down. I'll go through the technicals that are now driving this currency pair as it breaks below a key tactical level. So let's get started. Looking at the 4-hour chart, I want you to focus here on this yellow area. This yellow area is defined by a number of different swing lows and swing highs going back in time. Outlined some of those levels through here, here. You can see the number of different times that the price came within this area and either found support or resistance. Now, it wasn't like it was a point where we broke above, we traded above and below it through here. But whenever we entered into this area, the market thought about it, and the price either found resistance or support. In trading earlier this week, the market opened up and came down toward that level, found support buyers and pushed higher. That moved to the upside yesterday. Yesterday saw the price extend above this cluster of moving averages, including the 100-day moving average. We actually found support against it right here. The 200-bar moving average on the 4-hour chart and the 100-bar moving average on the 4-hour chart. However, the break above that, the last of those three moving averages could not be sustained, and the buyers turned to sellers and trading here today, pushing the price back below those levels, turning the buyers from more positive to more negative. And currently the price is now back below or trading below this swing area. And also the 50% midpoint of the move down from the July high to the low price that we saw in the beginning of August. So all those levels have been broken, and that has given the technicals a little bit more of a bearish bias. So be aware of that. Where I would say that risk is right now for sellers is probably the 50% midpoint level near the 1.3463 level. That's near the high of this swing area, maybe up to 6.7 actually, because that's the high of the swing area. And as long as the price remain below those levels, the bias remains more to the downside. And what does that mean? That means we could further see erosion toward the broken 38.2% retracement toward this swing area, this yellow area here between 133.60 and 133.78. And if we break below that level, we'll start to look toward the low price that we saw 3 or 4 weeks ago near the 1.33309 and go from there. So sellers are making a play here, breaking below a cluster of moving averages and a swing area and 50% retracement level. We'll see if they can keep that momentum going. If so, we got more room to the downside to explore in the pound versus US dollar. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.